So here's the dirty secret. The dirty secret is, we talked about this debt bubble, right? The world is 400% of GDP in debt, of which the US is half of it. The world has never been this indebted in history, and no country has been this indebted as a percentage of world GDP. What does that mean? It means if I raise interest rates, everything goes bust because nobody can pay the bill. That's what happened last year. Nobody could pay the bill. So what did the governments do? And the central bank will give you money to pay your bills. We will forbear your mortgages, i.e. you don't have to pay them for now. Any loans you've got, you don't have to pay them. Your rent, you don't have to pay it. And we're going to give you cash, and we're going to buy all of the corporate bonds, so none of them go bust, and the government bonds, and in some countries they bought equities too. So what is that telling you? It's telling you that they cannot allow the end game, which would be the global collapse. So interest rates might go up a bit, but they can't go up a lot because the world system will simply collapse. So, okay, so if you think of a debt like a mortgage, right? A mortgage, you have collateral, which is the money you put up when you bought the house, and the house itself. If the house falls below the value of the debt, then you've got negative equity. Now, that's fine if you can keep paying the interest, but when you can't, it's game over. The bank take it back and you go bankrupt. So the same as everything, collateral is the key to the entire system. What is the collateral? All this money you've talked about that people have borrowed, well, it's housing, bonds, and it's the stock market. Those cannot be allowed to break. They simply can't. So what we've got is this weird world where the moment economic weakness comes, and we just had the biggest recession in all recorded history, but it lasted 2 months in the United States. Why? Because the central bank threw everything at it because they're like, this cannot happen. And so the downside for equities is actually much less than it's ever been. So even if we fall 20% over the next 2 months, the central bank have this Pavlovian response is we cannot allow it to go lower because we can't allow it to destroy the economy. So we're going to print more money and make it look like stocks are going up. They're actually not. It's actually the value of fiat currency overall is falling. So I don't think the day of reckoning is coming. I think it's a slow day of reckoning where over time they devalue the currency and we just get poorer. So how do you get poorer in this situation? Well, traditionally an asset is what we put our money into to defer future consumption. So I buy stocks now so I can, when I'm retired, sell them and spend it on whatever I want to spend it on, right? That's what an asset is. You can pass it on generations. That's all we use assets for, deferred consumption and to protect the value of that investment. So if your income is not going up much, and it's not generally, but the price of these assets is going through the roof because these are valued in US dollars and the US dollar or all of these currencies are being printed. So it's actually falling. So it makes them look like they're going up a lot, but they're not. So what you've got now is your same income and all these assets up here. So your future self is now poorer, a lot poorer, because you're putting in the same amount of money every month into these assets, you're buying less and less of them. This is the trick, is you're basically devaluing your savings and your earnings and your what you earn and what you can do with that earnings. And so this is why crypto solves a lot of these issues. And that's why it's so important. And what people are thinking, and I thought this for a while, is at least I've got my money in the bank and nobody can take it away from me.
Yeah.
That's probably right? The probability of that bank going bust is relatively low. So you're thinking that, but what you don't realize is every year, what you could have done with that money has gone up exponentially. So had you bought a property, now the trade-off with property is it's bloody illiquid sometimes. And Dubai is a great place to go through property cycles. Sometimes you can sell a property in a day and other times you can't sell it for 6 months at any price. So property you need to be cautious of, but that $1 million that you've got in that account, suddenly that property's gone up 40%. You're now 40% poorer in that ability. And as you said, this implied inflation of stuff. So I talked to corporate treasurers about this. I was invited by Fidelity to talk to some of the largest corporate treasurers in America. And I'm like, okay, what is your cash on your balance sheet for? Because these US corporates, tech ones, have huge cash. I'm like, what is your cash for? They said, one is share buybacks. We return to shareholders. I said, fine. 2, M&A. We want to buy other businesses to keep growing. 3, we buy real estate because we open offices and plants and all that stuff. So great. So your cash, what are you getting returns on it? Well, we're kind of conservative. We get maybe 2% on our cash. I'm like, fantastic. And you keep topping it up because you generate a lot of cash to business. So when you buy back your shares, are you finding you're buying back your shares at higher prices all the time? They're like, yeah. I'm like, the real estate that you keep buying or building, has that gone up all the time? Yeah. What about the companies you buy? Has the value of that gone up a lot? They said, oh my God, yeah. So I'm like, what's happening is your savings are being debased versus these assets. So you're actually poorer as a company because you can't afford the things that you actually want, which is what the corporate treasury wants. And I'm like, this is why you need to have Bitcoin on your balance sheet, because it's going to offset some of this. And then you'll be able to do better M&A deals. It won't be so expensive to buy your shares back. You buy back more shares, so your share price goes up more. You're just thinking about it wrong.
If you enjoyed this video, make sure to leave a like, comment, and subscribe. We'll see you in the next video for more finance tips and up-to-date news.